Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick on this show today. Earnings, more earnings, and then more earnings after that. So just a lot of earnings to get to. We'll try to cover as many as we can. We only have one guest today. That's Tom Thornton from Hedge Telemetry. So we're just going to try to pound through as many earnings as we can. If you have preferences in the chat where you want us to go, let us know. We'll go there. But Joel, tell us how we're doing this morning in the S&Ps.
The S&Ps are up 2.25. Nice overnight session. We started with a higher open. We rallied. We couldn't get to the level of the, we'll call it the level of the month in the S&Ps. 2840. You have Tuesday's interday high there, Wednesday's Globex high, and you came down holding the close at 2575. So it's real important to hold that. If not, we have some room down to yesterday's low at 13 even. You have crude up 55 cents at 65.29. Gold just hanging out down 40 cents at 1342.70. Silver in the red by a nickel at 17.19. And Bitcoin under 10,000. Trading down at 9,500, making a new low of the move here. And Dennis, you could do a little rant on Bitcoin here, but we're gonna time you. It's gonna be a minute and a half.
You're only gonna give me a minute and a half?
Yes.
It's not a rant. I just want to report. Actually, Spencer could. I just want to report what was reported by a great writer over here, Nathaniel Popper. We're talking about there, reported in the New York Times. I'm going to actually just post the article over here. Spencer just posted the article. So, we don't know. It's all speculation, and it's speculation in the article as well. It's just, he's reporting what is being speculated out there. And that's why I like reading Nathaniel Popper, because he doesn't bias it. He just reports what is, out there. So it's worries. The article is entitled "Worries Grow That the Price of Bitcoin is Being Propped Up." There was a report back in early January about price manipulation. This was reported actually. Jim Angel tweeted it out, and it's actually mentioned in the article as well. But it was basically the paper that was written by some academics was saying that it looks that there's the potential that the original run from Bitcoin to like $100 to $1,000 was mostly by one account. So basically, they were washing it all the way up. What is a wash trade? A wash trade, which is illegal, and people go to jail for this on the U.S. markets. But again, in unregulated markets, funny things happen. A wash trade is just simply buying your own offers. So let's say this is how the scam would work, hypothetically speaking. Let's say, you have some virtual currency, and let's say, it's any currency. And this is, the original manipulation. So I'm going to be over a minute and a half. But a wash trade, so you could wash it all the way up. So if you had no market in like Bitcoin, let's say, for example, you could throw out an offer at $50. You buy your $50 offer. There's no difference to you because you bought your own offer. So it's a buy and a sell. So then to you is zero. Then you throw out an offer at $60. You buy your offer at $60. Then you throw out an offer at $70. You buy your $70 offer. What's happened is you've driven the price up with no money. That's what a wash trade is. So, obviously wash trades are illegal. And if that is happening, if that was the original run, you would hope some people would eventually go to jail. But unregulated markets, funny things happen. But that was what the paper was speculating. This is a completely different scam that Nathaniel Popper is talking about here. This scam here in this paper is talking about Tether. And we don't know, this is just hypothetical and speculation as well, but apparently every time Bitcoin was to drop, and Tether, just to give you some background, Tether is linked to US dollars. So if you put like $100 in your account, 100 US dollars, you can get 100 Tether. So it's very linked, and every Tether is backed by US dollars. But now there's speculation that there isn't the US dollars maybe in the accounts for the Tether that are issued. So there's SEC looking into this. And, if you read the article, it's all in there as well. So I'm just trying to sum it up for you very quickly here after reading the article 10 minutes ago. But every time Bitcoin was to go down, people were using this tether to basically buy it back up. And a lot of it was in $100 million increments. So big buyers coming into play and pushing the price back up. So the speculation is now, if there isn't the amount of US dollars that in the accounts for the tether, that means they were using fake money to buy the Bitcoin back up. And again, that's obviously issues here, and it looks like it's trying to be manipulated higher. This is all speculation. None of this has been proven. But as more and more stuff comes out like this, you wonder if there isn't something to it. I mean, in unregulated markets, you got to think there's probably going to be instances where there's going to be some manipulation. But this is looking like there's more and more manipulation happening. And they're speculating this could be happening in other cryptocurrencies as well. So read the article. Just word of caution to, obviously, any crypto investors out there, that there's a lot of, potential manipulation out there. And some of this run that we've saw in the past may have been purely due to manipulation. That's what's being speculated.
And well, I'm flat, so I'm really glad. I just was shaking on that 10,000, so I knew I had some work to do under 10,000. GPT split 93 for 1 or something crazy like that. So now it's a $15 stock or investment trust. Yeah, and
investment vehicle.
Yeah, and they're getting some volume into that. So I don't know. I mean, traded 8 mil yesterday. 5 mil, Dennis. I know you won't be trading it, but yeah, interesting here. I'm just gonna have to wait. I think someone mentioned about Spinner talks about the 50 and the 200-day moving average. We'll see. 91 for 1 on that split. But all right. This is one of the biggest earnings days, and this is going to be filed. Today is another big earnings day. And just for a quick reminder, 1 o'clock tomorrow, Gene, the dancing machine, Gene Munster from Loot Vetches. He doesn't mind when I call him that.
Did you make that up?
You know what that is.
That's not what he goes by.
You know what Gene Dancing Machine is, right?
I don't.
You're dating yourself.
I'm young and I don't know what that is.
You don't know? Come on, Brad.
You don't know.
Brad.
Joel, this is some cartoon you watched in the 60s, isn't it?
Gene the Dancing Machine?
This is some cartoon you watched in the 60s.
Dennis, you know it's not. You know what it is, right?
No, I've never heard of Gene the Dancing Machine.
Come on, someone in the chat help me out. Someone in the chat help me out.
Hey, just tell us so we can do one earning stock.
Jimmy's laughing at you. Spinner says this is a gong show now.
Yeah.
Who is Gene the Dancing Machine? I want to know.
It's from the Gong Show.
It's Spinner's from the Gong Show.
Yeah, he used to come out. Chuck Barris, he was and he would all of a sudden this music would come on. And Gene, we gotta get it up here. And he would come on and he would groove. Not as good as me. But Gene the Dancing Machine. Come on, man.
Oh, wow. I'll Google that later. Gene the Dancing Machine. Very interesting there. We can always get something interesting and new little tidbits there from Joel. Let's move on to earnings because we don't want to start this tangent. 8 minutes in. We had one of the biggest earnings days of the year here so far. And we haven't even mentioned one earnings stock. And let's go to Facebook from last night because this action in Facebook was absolutely incredible, almost unprecedented, but not.
All right, a lot of numbers here, so I'm gonna read them slowly. EPS 221 versus $1.95, so that's a beat. Revenue 12.97 billion versus 12.55. That's a beat. Daily active users 1.4 billion, which was a slight miss. 1.41 was the estimate. Monthly active users 2.13 billion. That's in line with the estimate. Average revenue per user $6.18 versus a $5.90 estimate. So that's a beat. The stock was volatile, like you said, Dennis. I want to point you to a comment that Gene Munster actually highlighted on the conference call from yesterday, where he cited this as the point where the stock started to rebound, from Sheryl Sandberg commenting on we know the changes to the newsfeed are coming, which they announced 2 weeks ago now, and she said that it wouldn't affect monetization. And it's not a negative. So I know there are some questions going into the call about how the changes to the newsfeed would affect monetization and ad partners, and because we know they're trying to get people to spend more time on Facebook. I think I read that the average time on the platform last quarter fell, I think about 2 minutes per person. But so they're trying to keep people more engaged. And she said that the changes to the platform would not affect ad revenue at all.
I got to tell you that it turned on a dime on those comments there, and the action after hours was absolutely incredible. We tanked on Facebook on the initial numbers, which were actually not great, from 186.89 all the way down to 177.10. So you're talking about a 9-point fall. And then that came out on the conference call, and we rallied like 15 points in 10 minutes. It was straight up there for 10 minutes. Absolutely incredible action to watch. Obviously, Facebook here it's now trading up 5 here, but BTFD wins again in this one.
All right, I just had to put Gene the dancing machine up there for a second. Oh, a lot of crazy action in this, and it came down. I was in the chat when this came down to its low. It came down to 177.10. And man, you just had one shot to buy it. I know that was the expected move in that area that coincided with the daily low. You kind of got a replay of when the stock got hit off of that little ad tizzy, and then you turned around and you went straight up here. We're holding here. We're holding it, man, up 561 at 152. It's moving a lot. 152.70. This is taking out an all-time high. So, the recipe for this, you keep your eye on the 15-minute chart. We're not quite at the high of the session. That spike was up to 194.68. So that's a target on the upside, currently trading at 192.68.
Just incredible action there on Facebook to rally that much. And the techs and the Qs got dragged along with it. Qs were down a buck. Then they obviously, following the Facebook lead, rallied up and were trading in the green. Now they pulled back a little bit, but just dragging all the techs along with it. Amazon was way down, then Amazon was way up. They were all just chasing the Facebook action. So great trading last night, just playing the chase on all of those stocks. Also reporting last night was Microsoft, MSFT. Disappointing the street slightly. Stock is trading down. Spencer, details.
Microsoft Q2 adjusted EPS 96 cents versus an 86-cent estimate. Sales of 28.92 versus 28.39 billion dollars. So they beat on the sales. They beat on the EPS.
Stock getting a little beat up after hours, got knocked down, but then came kind of storming back, actually went green for a little bit, probably with the Facebook. It was getting chased around there too. It is in the red here now. Joel, give us some technicals on Microsoft after this report.
Yeah, down 91 cents and 94.10. There's a lot of crazy action there between on that first 15-minute bar between 92 and 96.20. But when you get that kind of action, I think you got to hone into the daily charts here, see what it's offering. And you got a double top here just below 95.50. So where are we trading at? 94.10. We're quite a ways away from that. I guess the number is going to come into play first this morning will be yesterday's low of 93.51. If that holds, maybe get a chance to go up there and challenge the close. I wouldn't even worry about seeing that all-time high at 95.45, but 95.01, your all-time closing high. That's my number on the upside. Below 93.5, you're going to run into a little bit of trouble. Your 2-day low is 92.10. So nice action here in Microsoft.
Your disaster stock of the day is PayPal, PYPL. Absolutely annihilated here after hours. It's come back off the lows. But they reported the earnings and they were disappointed slightly down, but then it was something else said with eBay and what are they looking at, another payment system or something, Spencer? What's the catalyst here?
So I'll read you the numbers first. EPS,
sure.
55 cents is a 3-cent beat. Sales of 3.74 versus 3.63 billion. So good Q4 numbers. Q1 guidance coming in fine. Nothing bad. It was inline guidance. The real bad news comes later on during the eBay call, when they announced that they were going to be using a new partner, Adyen, as their global payments processor. They have a contract with PayPal that runs through mid-2020, and once that ends, they're going to be using a new payments processor on eBay. So they split the company right in 2015, and now they're just going further away.
Wow. So yeah, they spin them off, and now they're done with them. That's not good news for PayPal. And PayPal, PYPL, was trading around $81 when that news came out. And it tanked all the way down to $72.57, lost $9. talking about 15% of that news. It has bounced back. It was an overshoot. These markets always overshoot. It bounced back significantly, obviously, and is now trading, in the 78 handle, but still down $7. Still a mess. So a big chunk of that disappointing and what you're seeing it trade down is because eBay cut them out, or is planning to cut them out.
Yeah, wow. I guess we'll just stick with the whole number here, and that after that drop down to 72.57, you got back into the 80 handle, stymied at 80.33. So trade at 79 even. Let's see what we can do. If it gets back into the 80 handle, you have some real estate here on the upside, but sellers are ganging up ahead of that. Man, that 72.57 low, I don't know if that's going to come into play.
I don't think so. I think it's an overshoot.
But I would say, over the past hour, you have a buyer at the 77.50 level. You had 1, 2, 3, 4, 5, 15-minute brackets targeting that 77.50 area. So I'll be looking at that. Early parameters, 77.50 to 80 even. Basis the daily chart though here. I mean, what a run. I mean, started the year at under $75. I mean, there's just a lot of room on the downside here. If someone really wants to, get out of the position, 73.40. I'm just trying to see if there's a low with that 72.47. Yeah, you had a 72.63 low on December 26, but still digesting the move one day after making an all-time high.
Let's just jump over here to the Alibaba report, which is crazy as well. Baba is moving around. Big numbers here. It's down $7. So Spencer, give us the details on Baba.
Baba reporting Q3 adjusted EPS of $1.63 versus $1.67. Sales of 12.76 versus $12.68 billion. So a mixed report. They're also buying a 33% stake in Ant Financial. Remember that that merger got rejected, right? A few months ago. So a mixed report, and that's what I got.
Alibaba trading down here. I mean, expectations so high going into the report. We go right back to, when your chart is straight up going to the report, your expectations are high. So not surprising that, if they don't blow it away, that the stock is trading down here. 204, 197. What I will say is on, obviously, Alibaba and any of these other stocks that run straight up, always seems to be underneath demand. I think if you, and I don't know what the pre-market low here is, but I'm looking at the area that it broke out from. That was like 191, 192. You had resistance there in November. You had resistance again there in early 2018. We finally broke out of it back on January 23rd, and then we were straight up for a week. We pull back to that area. I think there's underneath demand around that 192, 193 area.
195.12 is your pre-market low. Nice volume being traded here. So you have some serious buy-in. And S&Ps, what just happened there?
Watch us happen.
What happened? Something just happened here. We just lost 5 points real quickly. Did you see that, Dennis?
Yeah. We're getting the beats here right now. Something happened.
Nothing?
I don't know. We just dropped. Did somebody report? Somebody else report maybe?
I don't.
We have the new. We'll find out in a couple minutes. I don't think anybody else knows.
Somebody said something. That was a big drop. 5 points. That just dropped just like that.
Yeah, you can see what Dennis and I are looking at during the show here.
Well, we're looking at everything, but that just flashed red. Been green the entire session.
Yeah,
now it's a splashed red. So somebody said something somewhere. That's a pretty big drop there for S&Ps right now. But anyways, let's continue on.
Just a minute ago, yeah. Oh boy, this is continuing here. Down 350 at 22 even, 21.75 prints. Yesterday's low is 13 even, and we could be there very quickly. Let's just go back. Let me get rid of this 15-minute chart here. I'm getting all confused. Baba, BA, pre-market low, I mentioned is 150.
That's what I was wondering. What's pre-market low?
I had that for 1 second. Let me go back. I think it's 195.12.
Yeah.
Boom.
So we're slightly off the pre-market lows there.
Yeah, 195.12. Sellers ganging up here at 198.50. That was the high in the last couple brackets. Let's go to the daily chart. And what's the daily chart tell you? It tells you got a lot of room down here. Did have a low in the lower 190 handle, and that low was at 192.40, and that was on January 24th. S&Ps are continuing to go
S&Ps are still falling out of bed here. There's got to be a headline or somebody said something somewhere. anyways, I'm just trying to look through my headlines here
I'm
too.
looking in nothing like political in nature that I can see, like nothing out of Washington. So.
Chat if you see something, because we're looking at a million news items here. There's so many earnings reports and stuff, so it's hard to dig. Nothing jumping out at us right now.
Yeah, CNBC has new ways to watch football up on the screen. So.
That's gotta be it. That's gotta be it. Jump over here to MasterCard. MA is bouncing around here in the pre-market as well. They just reported earnings just a few minutes ago, right at the top of the hour, 8 o'clock. Spencer, details on the MA report.
$1.14 versus $1.12 and 3.3 versus $3.26 billion. So it beat on the EPS and it beat on the sales.
Stock just kind of hanging out, not doing much. But again, I have this one in my invest portfolio. This has just run straight up into the report really as well. $150 a month ago, 170, 180. So caution the people who are chasing these things, because they have been selling off stocks on good reports as of late. It is trading in the higher. It got hit a little bit on the initial number. Bounce back up. It's still digesting it, though, I'll say. So we're waiting and as it digests the report.
Let's see here. Wow, what a range here in that initial bracket. You had a low of 165.52, and on the same bar, you had a high of 173.29, settling in here at 172 even. That's up $3 on the session. Let's go to the daily, and what is this, all-time new high territory? Oh yeah, you are taking out that double top at 170.36, 170.81. So that's a buck away. That's your 3-day high. So as long as we hold above that, I think you got a chance to test a pre-market high. Yesterday's close, though, don't let it go red. 169 even. That was the close, all-time closing high, 170.34.
Just a million reports. So if there's anywhere you guys want to go, we won't be able to cover all the stocks, obviously. But let's go to that eBay report. We talked about it in reference to PayPal, but it was a pretty good report themselves because they are trading up 10% on their report. Huge move here for eBay overnight.
Well, yeah, the earnings were in line too. So EPS 59 cents is in line. Sales of 2.6 billion is pretty much in line. It's a slight miss, but more or less in line. Oops, I just went to another window. There we go. Guidance for eBay Q1 EPS coming in line more or less, and sales guidance higher. 2.41 billion was the estimate, and 2.57. 2.61 is what they see for the quarter. Fiscal year guidance, more the same. EPS is a tad higher than expected. Sales is higher than expected.
That's a huge pop here for eBay. So we're looking at 10% pop. I don't know what the expected move was, but I doubt it was that high for a stock that typically moves around a couple bucks on their earnings reports. So I would imagine some straddle writers getting it handed to them on this one. eBay up 10%, up against a big psychological $45 level there. But you know, really, when we look at it, this is all-time highs here for eBay. So is there any resistance, Joel?
Not much.
Joel, mute check.
Yeah, I'm trying to get my charts right here. Lost my 15-minute chart.
You're trying to hit your screen because the S&Ps are showing red. They're not supposed to do that. I took your joke.
Pre-market high, 45.60, currently trading at 44.82. You took a couple pokes above 45.5 and you've been rejected. So let's see what happens. Actually, you've taken 4 pokes in that area and you fall back. So definitely a seller lurking here at the 45.5 area. After that, using your half from the whole numbers, 46 even, up 10%, up 424. Coming back on the downside, I mean, $44 actually was the low after making that high. So I would call that minor support as well.
Day 24. Again, we're going to go back to the earnings stocks, but we got one big rating change that I have on my list that I want to talk about here, and it's Chipotle, and it's getting downgraded to sell at UBS here this morning. It's always interesting when these analysts go sell. CMG is trading down $7 here in the pre-market. A stock that came back quite a bit November and December from the lows. We know we were in the gutter down there at 280, ran all the way up to 345. Coming off now at 324, we're down at 317 here in the pre-market. I don't know, Joel, what are your thoughts? 50% retracement here, or is this something you're just staying away from?
Yeah, 317.50, just holding above the pre-market low. Let's go to the daily chart, see if we can get anything off that. We did have a spike low, your 2-day low was 313.01. So if I'm holding out for short, I want to see it take out that pre-market low, try 313.01. Dennis is talking about a bigger move here that we had from 270, let's call it 274. Oh, this is going to be a little bit harder math, to 345. So let's just call that what, 70-point move there. Add 35 to 274.
Here comes your math.
310. I mean, if you really want to try and bring a short in here, if you think it's going 50%, just keep an eye on a few of your other daily.
That 313.01 low from a couple of days ago there too. That could come, so keep that in mind because it kind of coincides with the 50% retracement that Joel's talking about. That's a big level. We're $4 away from there. That's where it needs to bounce. Below that, $300.
And you just don't know if there's some shorts that have been stuck here and this rally up may want to, try and bring it in, or some short-term option players.
Could be. And they report next week too, as Spinner's saying. So sometimes you get run-ups ahead of the reports as well. We saw that recently. But I don't know. Let's go back to the S&Ps here just for a second before we go back to the earnings stocks here, because I had a call yesterday from one of my buddies over at NYU, and he's just asking me, what are your thoughts here? He's fully invested. He's like, should be taking chips off the table here. Do you think this market's topping out? And I was like, you know what? I've tried to call the top of this market for a lot of years, on the way up, and I haven't successfully done it. So I'm done trying to call tops. But I will say, if you're fully invested in this market, you have been making out like a bandit, obviously. If you're, 100% or even on margin fully invested, I don't know. Maybe you do take some chips off the table here. I mean, there was a serious breakdown there the other day. Now you have a day where you did breach the low, but, we bounced back towards the end of the day. The Facebook bounced back. It looked scary last night when Facebook was down, but now that it came back, that helps. But, the market seems to be rolling over quickly when it gets these gains. Here we are again. We were trading up overnight over 10 points. We've given it back here again. Kind of feels like, at least short term here, the buy the dip is a little bit on the outs and it's sell the rip a little bit. What are your thoughts there, Joel? Should we take in money off the table here? Like and I've been underinvested for a while, unfortunately, and, from a portfolio perspective, and I'm hoping for a pullback just to get in. That's why I think they're still underneath the man down here, because I think there's a lot of money managers that are still underinvested. But if you're fully invested, should you be worried?
Maybe moving things around a little bit. I've had some discussions with one of my buddies that I have some funds with, and not trimming a little bit in things that are a little bit more interest rate sensitive. Some of the the dividend funds and dividend stocks have been in for a while. Kind of
utilities.
Yeah. Oh
no, I haven't. Like if you wanted to move into something defensive, the utilities have been assassinated. I mean, and that's a lot to do with interest rates going higher. Is also that, the factor of the California wildfires, and you got stocks like PG&E, which is symbol PCG, that have been killed. But I mean, look at a stock like Southern, for instance, SO. It seems like, when you look at Southern, and, I took your point and I'm going to bring it back, but, every time this gets up into the mid 50s, it finds sellers. Every time it gets down to the lower 40s, it finds buyers. I'm looking out to a monthly charter and going out and looking actually at the years, and you're looking from 2012 all the way to 2017. That has held true. It seems like every time this thing gets up to 5.5%, 6% dividend, there's buyers. So I don't know. Utilities, if you're underinvested in that sector right now, which would be a good thing. I have really only like one utility stock in my entire portfolio. That's interesting.
Right. And, Mark Yusko, who we had on a couple weeks ago, was, he was favoring, the emerging markets, take some money. He's kind of actually bearish the U.S. market. I mean,
yes.
A big time manager just looking for growth overseas.
I don't think he was bearish. I think he was just more bullish on the emerging markets. I think
I don't know. He sounded flat out bearish to me, Spencer, on that show. Like he was talking about a serious pullback, and he's pro Bitcoin too. He's a big crypto guy. So, obviously that isn't working out for him as of late, but, he's been bullish crypto for a long time. So he's been on the right side of that trade for a long time.
So it's just, once again, too, plenty of cash on the sidelines for, those dark days and stuff. I mean, obviously long-term trend still bullish. The thing I'm noticing about this recent S&P move is we're just not getting like that 50, that we've had the break. and we're just not going back. We're not retracing that 50%. People are stepping down. So I thought, 48 even. Now you're going to make a new low of the move. So every move has a counter move. And right now, these counter rallies surely don't have Friday was the day that, if you want to talk about a blow off top, Friday just kept going and going and going. We were up like 30, 35 handles. Another thing you got to be aware of is the average daily ranges are expanding. We are getting more volatile. A lot of the run up here, you had tight ranges. You're just moving up now. Now, Mr. Vol's coming into this, and a lot of times when you get a lot of volatility and increase in average daily ranges, it's not good for the market. I'm not rushing out and buying VIX or anything right now, but the rallies just don't have the same kind of punch that they've had, over the last 6 months or whatever. So
there's some people taking some profits. I wouldn't say it's flat out like, selling. People are out here selling this market short, but there's definitely some people who are sitting on some big profits that are taking profits the last few days.
And month end too. Yeah, month end yesterday.
Healthy.
Month end yesterday,
Yeah.
Lock-ins of profits.
Yeah, that's healthy too, though, Joel. Like everybody talks, but really, it's healthy. Profit taking is healthy. So
if you have profits, that's right.
Profits, yeah.
Let's go. Any balances here? I think that there's got to be some selling balances. Someone got real nervous here or something and hit that sell button. We continue to make new lows, 19 even. Dennis, we're down 650. I don't know if I want to go another steak dinner here on something, but
I'm not saying we're turning green here. You already got me now. No more steak dinner bets for you. Like you said, those are supposed to be longer term bets. I should almost say, well, anyways, you scammed me on that one. So we're not doing that. Let's look at the imbalances. They are mostly to the sell side.
There's got to be something going on. U.S. initial claims at 230.
Which Java's claims just came out, 830. So they're hitting it a little bit on that, a little bit further on that. But yeah, Java's claims just came out.
All right. Volatility is emerging here. Bevy, selling balances here, Dennis?
Yeah, you do. Square 57,000 to sell. That's going to be down because of PayPal. So that was trading down last night, even with the market up. PayPal's bounced back now. It's actually $79. Alibaba, 102,000 to sell off their earnings report. GE, which goes down in an up market, it goes down in a down market too. GE just goes down. 190,000 shares to sell in GE this morning. There's a seller every single day, it seems like, in that. Verizon, 87,000 shares to sell, which is interesting because AT&T is way up on their report, which we haven't covered yet. Maybe we'll cover that in a minute. But Verizon trading down. If that was to open on the red, I think that's an opportunity there because AT&T is way up. And usually those two usually pair well together. Just trying to bounce around. They're mostly small, but they're mostly to the sell side. Citigroup, 45,000 to sell. Even Coke, 72,000 to sell. So it's kind of across sectors a little bit there. Really struggling to find buy-in balances here this morning. MetLife, which also reported there just last night, I believe it was, MET, it's got another 28,000 to sell here this morning and trading in the red. They had actually reported preliminary numbers. There's a lot of issues here this morning.
All right.
A lot of imbalances that are to the sell side.
All right, Dow just hit a low of 1475. That's $1.75 away from yesterday's low of 13 even. So quickly losing altitude here in the S&Ps. We got another minute or two here before we bring our guest on. Let's go over that AT&T report.
All right. I was wondering when we were going to get to that. AT&T reported yesterday after the bell Q4 adjusted EPS 78 cents versus a 65-cent estimate. Sales, sales 41.7 versus 41.17 billion. I'm sorry, 41.7 versus 41.17. I said that right the first time. So the sales number beat, the EPS number beat on adjusted basis. The guidance that they gave was a fiscal year EPS number that came in higher, $3.50 versus $3.05.
It got the big pop, and I'm short AT&T into this pop because I just think it was overdone. It got up over $39, lots of resistance up there, but it's holding up. So it's been holding up even with the market giving it back. It's holding up. So it's maybe telling me I'm on the wrong side of my AT&T. I've actually hedged it with some Time Warner now. It's a little bit difficult to hedge that with Time Warner though, because Time Warner reported earnings there too. But anyways, there's usually a relationship there because obviously that merger is still on the table, even though we don't know it's going to go through. I don't know what to say. It's a big pop for AT&T. This is a stock that has very much outperformed the market in the last couple of months. It went from $32 up to $39, giving you dividends in the process there. But I just think you got that 39,
Yeah,
mid 39 area, all kinds of resistance.
Yeah, big resistance. You did get a pop to 39.22, right in the area of 3 daily highs that you had from 39.11 to 39. Well, actually, you had, wow, how many daily highs here from 39.11? Whoa, it's more than that. 1, 2, 3, 4, 5, 6 daily highs in a row near the end of 2017. You can see them right in this area. That's what you hit in the pre-market. Dennis, stick with that one. I think that, that one could reap some dividends. Up $1.25, still at 38.70. I wouldn't even be surprised to see a gap fill in this one. Yesterday's high, 37.92 for safekeeping. Maybe get an order out there at 38 if they hit it off the open. Yesterday's close was also a double close area at 37.44, 37.45.
All right. You're headed down on your comments, Joel.
Very nice. 8:35. We're going to take a quick break and grab our guest of the day, Tom Thornton from Hedge Fund Telemetry. We'll be right back with Tom.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined by Tom Thornton, the editor of Hedge Fund Telemetry. Tom, how you doing today?
I'm doing well. Thanks for having me on.
No, what we enjoy.
Good to be back.
Yeah. So this is fun. Maybe not everyone looks at the markets like this when you get the volatility and it's going down, but it's certainly a nice shake up here. We're 60 points off that all-time high that we made. Tell us how you approach these kind of markets now, how maybe a little bit more enthusiasm for analyzing things now that things aren't going straight up. So give us your overall take on the market, and then we'll go into some individual issues and sectors.
Sounds good. Okay, so I have a hedge fund background. I was the head trader for a $5 billion hedge fund a while back. I now run Hedge Fund Telemetry, which is a daily newsletter as well as a website that I track sentiment. As well, I am an expert with DeMark indicators. And DeMark indicators are technical indicators that help people buy into weakness and sell into strength, anticipating trend exhaustion. And a good way of thinking of it is basically we've run out of buyers on the upside. It's not that smart sellers come into the market, but just buyers stop buying. And I have a few charts that we're going to go through that gives a bit of context on how I'm seeing the markets. And I even threw in Bitcoin in there, which I have no position in, but the indicators worked very well, and they still are working quite well.
All right. Can we start with this SPX sentiment one that you just sent over, because SPUs are getting hit this morning, so I want to start there. What's on this chart?
Okay. The interesting thing about sentiment right now, a lot of people look at the Investors Intelligence Sentiment Poll, and it's the oldest poll out there, and they lag by about a week. And so yesterday's report showed 66% bulls, which is like almost an all-time record, and 12% bears, and 21% of those newsletter writers expecting a correction. Now that's an extraordinarily low number, showing a lot of complacency. The chart you're seeing here is a chart that I publish every day, and it's the Daily Sentiment Index from Jake Bernstein. And I get the raw data, I chart it, but what it's showing right here is you see those upper red places up there. Now, we just hit 96% bulls, which is an all-time high just 10 days ago. And today, or excuse me, yesterday, the reading was 65%. So we've seen a lot of bullish sentiment worked off in the last 10 days with the volatility creeping into the market. And I actually think that's a really good sign. Now, the way I use this chart and the way people should look at it is that 50% level, it goes from 0 to 100%. So if you're bullish, you're bearish, it's calculated. And so 65% are bulls right now. If it breaks below the 50% level, that means there's a majority of people out there that are bearish. And usually when you get below that, you see a move all the way down towards 10%. Now, if you look towards the middle of that chart, you can see the green. That it hit 10% the day after the election, when everybody was wetting their pants, worried about the end of the world. This was a great buying opportunity. And as well, with the DeMark indicators, we actually had a DeMark buy signal 3 days before the election. So when these things line up and correlate together, it gives a pretty spectacular reading for us. So sentiment is dropping. We'll see if it holds the 50% level, which that's been happening in the last year and a half, so or year and 3 months. So we'll see if that holds again. But if it does break, I think we're going to have some real volatility.
All right, let's move on to this monthly chart of the SPX and show us. It's got a lot of a lot of numbers on this chart. Show us what we're looking at.
Okay. Now, one of the things with the DeMark indicators, you look for 9s and 13s, and on this chart, I eliminated all the little counts, but just let the 13s and 9s stay there. The 9s are shorter term, and the 13s are more significant. So one of the things I did on here as well, and it's hard to see, I'm sorry, but I sent it out on my daily. I show I overlaid the peak in bullish sentiment and the lows in bullish sentiment. And as you see on the right-hand side of the top, we've had 2 upside 13s. So these are monthly, and they're rare. And the last 8 have worked rather well, as you see. It might take a few months before they start to roll over, but they've had a return of, throw out the 08 levels, but they've had a return of about 10% downside on average. The last one only returned 5% downside. So this is a significant chart here that I am basing my conservative, cautious view, which is not necessarily go out there and pushing your chips and short everything in the market, because I think that's going to be rather tricky at this point. But it's more, hey, raise some cash, which is something you guys were talking about a little while ago. I don't mind missing out on some of the upside. If I'm 75% invested or 50% invested and the market's going up, I'm still making money. So that's my call here. It's a longer term call. And the blue line is a wave upside target. So this is a DeMark wave target of 2772, and that's been achieved. And so I think that's a rather significant place too, if anybody's an Elliott wave fanatic. So let's keep going.
All right, I want to jump ahead actually to your Bitcoin chart you sent over. Okay. Bitcoin versus the dollar, and explain to us what you've charted here.
Okay. Okay, so on this chart, look, I have no position in Bitcoin. I do happen to know when things start to get a little crazy and out of hand. I've been through a few manias. But as you see, the upside 13 happened the day after the peak, and that was an upside exhaustion signal. And within a week, it dropped 48%, and it's rebounded a little bit. But what we have now is a downside red count, and it's on day 5 of 13. So that this analysis suggests that Bitcoin should travel a little lower. And as you see, the 5 on the upside was just the beginning of another, I think, doubled almost from that level. So I don't have any real targets of this. It's, you know, it's the Wild West in Bitcoin, but certainly when you're breaking you know, multi-month lows, and you have a lot of people, new people that got invested towards the highs, I think you're going to have more selling.
Then the one you sent over after that actually is interesting, because we were talking about utilities earlier. This is a chart of the XLU, and so tell us what exactly you're seeing in the XLU.
Okay, now this is a good example. As you as you put it up, so the upside exhaustion in November was actually a pretty good signal to sell short utilities, and there's certain stocks and sectors that have really good results historically with the DeMark indicators. I can tell you honestly, the S&P has had a very tough time finding any pullback with the upside exhaustions. I totally admit that, but that's also a really important key. But here, what I'm looking at here is you had the upside exhaustion around 56. It's rolled over, and I have the 20 and 50-day moving averages on there as well that that broke down. And then we recently had 2 days ago a downside exhaustion signal, the 13. And the two indicators below that, the first one is the percentage above or below the 50-day moving average, and it's down 4% below the 50-day, and then the one below that is the percentage above or below the 20-day moving average, and that's that red line. So it's starting to move back above the 20-day moving average, which I think is a good sign, and has the potential for a defensive trade at these levels. And I think it's also a very good bond proxy. So maybe the upside in the yields could halt around the 275 level. And everybody's wanting 3%, but sometimes you can't get what you want.
We're on the line with Tom Thornton of Hedge Fund Telemetry. Tom, talking about cash on the sidelines, asset allocations. You know, when you get a down market, a lot of times you have gold and silver going in opposite direction. Nice move in both of those metals. Silver taking a pause here around the $17 level. Could you give us, I got a daily chart up here of the silver market. Give us a short-term and long-term outlook on silver.
Okay, well, silver and gold, they both trade very, you know, they're tightly correlated. Silver usually has a little bit more juice percentage-wise. I think silver and gold, I like the patterns, and I like the opportunity for a breakout above these resistance levels. I can tell you that the bullish sentiment on silver, and let me just pull that up here, and gold, was really overdone in December. And gold got to 13% bulls, and that was on the 12/11, and it recently hit 91% bulls on the 24th of January. And now it's 71 on gold. Silver hit 10% bulls back on the 11th, and it recently hit only 77%. So, and now it's at 58. So it's backed off a little bit. On hedge fund telemetry, we had a buy signal on gold, which actually correlated with a downside DeMark exhaustion on the same day of the low in sentiment. So I like when both of those line up. We've actually said to take profits in gold just recently last week, which may be a little early. It happens, but we made 7%, and I'll take that for a month.
All right, I want to do one more chart that you sent over, and that was the chart on Amazon. And of course, they're reporting earnings. But tell us what is on this Amazon chart here.
Okay, well, I can tell you this. One other thing, as far as cash on the sidelines, January, the totals just came in, and there were $78 billion inflows for January, which was 30% higher than any other market or any other month for the market. As well, short interest has gone up on the last reading. So you have a lot of fuel for an upside move. And perhaps we've seen this. Now, this is the daily chart of Amazon, and it goes back, I think, 2 years. And the upside 13 signals have actually been pretty good on the a few times, and a few times right before earnings. And the parabolic move has had 3 upside exhaustion signals and 1 yesterday. And I personally would not be long Amazon going into the report tonight. And I love Amazon. We all get stuff from Amazon every day, but the stock is extremely overdone. And there's also another thing is a lot of people will say, well, the market signals don't work. The last downside signal back in September, you'll see it under that little bit of yellow. I marked it as far as the return down. That upside signal, as you see, it worked out pretty well. That downside right there around 900. And so my personal view, people want to buy, as you see with some of the wild moves in Facebook last night. And we'll see what happens with Alibaba today, which is my largest holding, by the way.
All right, we'll see what happens indeed. We've been on the line with Tom Thornton. Hedge Fund Telemetry is his site. Tom, thanks so much for the charts. Thanks for coming on. We'll talk to you again soon.
Sounds great, guys. Have a great day.
You too.
All right. Boy, oh boy, what a wild and wacky pre-market session here. We just dipped down to 1350. So if you were holding out for yesterday's low of 13 even, you just missed it. Getting a bounce off it. Dennis, I mean, we just one of the biggest down moves I think we've had on the show really since 2016 here. Are you identifying any catalyst behind this? I know we've had some economic data coming out here. Things are quiet, not bad earnings. Anything you're seeing?
I mean, really across the board weakness, though. Obviously there's a few earnings stocks that are holding up, but if there's no news on the stocks, they're trading down. I mean, you even seen gold and silver trade down, which typically will rally in days that we're selling off. There's definitely an inverse correlation between gold and the markets, but that's not holding true today. Silver absolutely getting hit on the chin, down over 1% here now. So if you're looking for a safe haven in the precious metals, that is not working here this morning. I'm just seeing it, just a bunch of different sectors. I mean, we had a lot of smaller companies that reported, and some of those are actually trading down. Like Hershey's is down $4 on their report there. UPS, which we didn't cover, is down $7 on its report. It seems like as the reports been coming in, the majority of the stocks are trading down on them. There is some isolated incidents like AT&T we talked about. Facebook is still holding on to its gains, although not up much now. Microsoft has continued to leak here in the pre-market. Alibaba is still getting killed, down almost 10 points here now, getting close to the levels that we were talking about just earlier in the show. I mean, it's kind of just selling across the board here in a lot of different stocks. So I think that's, and then the jobless claims didn't help.
All right, coming up, we just made a new pre-market low here in Alibaba. And, boy, on top of it, tomorrow's the first Friday of the month, but the way it's falling, are we going to have a jobs number tomorrow?
Yes, we do.
Yeah, so a lot of...
That's always interesting, too, when you get jobs number, a very early one, and it's going to be a wild day tomorrow. I mean, we're getting Apple, Amazon, Google, Visa tonight, AMZN, even smaller ones like GoPro and Mattel and Cypress Semiconductors. There's just a lot of stocks that are due to report here tonight, and that's going to be the driver. And then you get a jobless number on top of it all. Going to be a wild day.
And probably couldn't pick a better day to have an afternoon show tomorrow at 1 p.m. over these same airwaves. We'll be on with Gene Munster of Loot Ventures discussing all the reports, probably getting a little preview of Tesla. And he was pounding the table when it was down there 300, 310. So got to give us some credit for that. I did tell you, I talked to a couple different solar panel installers yesterday, and man, they couldn't be more bearish. Tesla and their products and everything. They just it was just both of them that I talked to.
You mean the Solar City component of Tesla?
Yeah. I mean, they're just like, man, you talk about someone that's undelivered, not delivered on expectations, but that's just expectations.
I haven't heard anything about Solar City since that went through. I've heard nothing about the success or not of their business. It's funny.
You swept it under the table.
Swept it under the table.
Yeah.
Just haven't heard. Anyway, 8:55. Should we cover some more earnings? We want to do couple more ratings or updated balances? Where should we go? We got a lot still.
Well, there was a lot of earnings, some that we didn't cover, and I think we should go. U.S. Steel, they were talking about this one in the chat. It is not moving at all. They were saying the expected move out this earnings report. I'm just trying to scroll up in the chat where it was. It was over $2, the expected move, which obviously did not. $2.90, John Dodson is saying was the expected move. It's moved 4 cents. So straddle raters here are laughing all the way to the bank here, at least, off the bat, because the move has not, materialized here at all. It did trade up a little bit on their initial numbers. Give us the numbers and I'll give you my thoughts.
Let me pull up my U.S. Steel numbers here for a second. So 76 EPS, 76 cents, and then versus a 67-cent estimate. Revenue of 3.13 billion. It was 2.65 billion last year. So an 18% increase for the quarter.
I mean, you got a little pop here, but what I'm going to say here is this chart looks broken. So technicals sometimes do matter even with fundamental numbers. And when the numbers are wishy-washy, you go to the chart. And the chart does not look good. You had the 2-day down move. We couldn't get the lift on all the infrastructure spending that Trump talked about in his State of the Union address. It got a little bit of a pop, but it gave it all right back. And when it can't pop on that news, that you're going to spend, all this, 1.5 trillion in infrastructure, I was telling you that you've got buyer exhaustion here. Our last, guest just talked about this. This looks like buyer exhaustion all the way. I mean, the stock has run, and just put it in perspective. This back in the summer was $20. So it's doubled here just in the last 6 months. And now we look at it. It looks like buyer exhaustion. Chart looks broken. Technicians are saying get the hell out of the way. You got a little pop here in the pre-market, but I think it's going to go into the red here. This is one that if I had to make a bet right now, I think it goes down, even without even knowing the numbers.
And didn't Gordon Johnson change his rating on that a few days ago?
Is Gordo on this one?
Yeah, he initiated it as a sell.
Oh, really?
Yeah. Pretty nice.
And I'll tell you one thing, Gordon isn't as widely followed as some of the other analysts on the street, but I'll tell you, I follow him because he gets things right. A lot of times, he's all over that first solar. I'm kicking myself for not buying the first solar. We had the buy recommendation down there when it was $45, now 67, obviously. He's all over everything. So, that's the consideration. He comes on and, he's usually right. His timing is impeccable as well. So Gordon Johnson, great one to follow. Have him on the show every once in a while. But it sure looks broken, doesn't it, Joel?
Yeah, it surely does. Staying green here by 4 cents at 37.45. We're focusing on yesterday's low. Yesterday's low was 36.80. So boom. Look under 36.80 here. You got a big drop down to 35.39. So once again, a lot of people sitting on a lot of profits. Stock was under $20 in May and now over 40. And I think, Dennis, you owned this one time and it had a run up over 40. I think you sold that thing in the pre-market. I think this was back.
I had in my investment portfolio a long time. And I sold it at the highs.
Yeah.
That was going back. Oh, you got to go out. It was a while ago since I've owned U.S. Steel. It's back in, was it 2014? Was it that long ago?
Yeah, I got it.
No.
Yep.
I think it was.
You sold it during the show.
$45. I got a buck off the highs, and then it sold all the way off to under $10. I guess I should have rebought the shares. But I never did.
Let's 1 minute left here. Frankie in the Google chat is asking about overstock.com here. OSTK.
They report Monday after the bell.
And it's a crypto play as well here.
Yeah.
So you've got to look at this one starting to look broken too. I'm sorry to say it, but I just look at this chart here with the weight, you know, that Bitcoin, you know, is going down here now and breaching 10,000. I know you sold your position. The crypto charts don't look nearly as good here now. This is following suit. This does not look great to me here either. I think if it breaches, and obviously the earnings report is what's going to matter, so that will drive it. But if we get down below that 66.70 low, which was just the low from January 17th. You know, you could argue that kind of a little double bottom is in place, 67.10, but we're trying to take it out here in the pre-market. I see air to 60.
I know.
And, you know, the multiples, you start analyzing this from a valuation perspective, it doesn't make any sense to me. So that's where, you know, it's had such a run. You know, in July, go back to July of this year, we were $17. Now we're 80. Same went parabolic. It's time, you know, you got buyer exhaustion happening here too. So a lot of this isn't due to just selling pressure. A lot of this is just simple buyer exhaustion. Everybody bought the hell out of this thing for the last 7 months, and they're getting tired now. And the chart's starting to look broken. So if I was in this, you know, my own opinion, we don't give recommendations, but if I was in this, I'd be looking to ring the register.
A couple other things here, and I just want to mention this because we've had different analysts or traders come on. Nick Shaheen, who joins us every Tuesday. A lot of people have made a lot of money like selling puts, right? You know, that, just saying you're going to bring in the premium, and, you know, you leave yourself a lot of downs, a lot of potential loss in there. If you like these kind of stocks and you're doing something here, you know, clip your wings a little bit. If you're selling a put, then you got to buy one lower. I mean, because you just don't know what's going to happen on, you know. Would we be surprised if this stock opened up at 55? No. Would buyers come in and there'd be a rally? Yeah. But if that's been your strategy of selling puts, maybe, you know, be a little bit more conservative. Make go to the put spreads. At least you know where your loss is going to be, because, you know, it's a dangerous game, and people make money. Selling naked puts. And I know you have your cash secure and everything, but been a great strategy, right, Dennis? You change strategies, you do different things, and right now, selling that puts, if that's been your strategy, especially going to these earnings report, because this thing could have a unbelievable earnings report and still go down $15. The market's unpredictable, so just words of caution here. Going into a big day after the close with Apple, Google reporting as well. Spencer, I mean, I know you want to preview tomorrow. Go ahead.
Well, before we go, can we get one more level on this booze, just because we had a bit of an interesting morning?
To me, it's all about that 13 even. Yesterday's low, 28.13. Current low, 28.13.50. Your targeted range here would take it down to 28.11. So, it's taken a couple pokes down there, but man, just the way we've ripped through these hundreds, 2,400, 2,500, 2,600, 2,700, 2,800. I mean, we got some work to do, and I think it's going to be under 2,800. I'm not going to give up the edge to Dennis any kind of a longer term bet here. I'm going to hopefully get a little bit of a rally, but keeping an eye on 28.13.
All right. On tomorrow's show, we are joined by Mike Olson, who is a managing director and senior analyst at Piper Jaffray. He's the new Apple guy at Piper. And then, of course, as Joel mentioned, we have a special bonus show tomorrow at 1 o'clock. We'll be joined by Gene Munster. But if you want to catch any part of today's show, catch our podcast on iTunes, SoundCloud, and Stitcher, or just rewatch the show on Benzinga's YouTube channel, youtube.com/BenzingaTV. Thanks to all of you who joined us today in our chats. Thanks to our guest, Tom Thornton from Hedge Fund Telemetry. Hope you all have a good rest of your day, and we'll join us again tomorrow. Have a good one.
Peace.